Let me tell you something that slipped under the radar, but it's going to affect every first-time homebuyer in America, especially first responders and blue-collar workers. Two major rules just changed. One of them will save you headaches, and the other one has people in the industry terrified. If you're planning on buying a home in the next 12 months, these two changes could help you or completely derail your loan if you're not prepared. Let me break it down in plain English. You probably clicked this video because you heard people talking about the new rules or easier approvals, and you want to clarify, you want to know what it actually means for you. Here's the truth. Most lenders won't explain this clearly, and a lot of people on social media are already getting it wrong. By the end of this video, you'll know exactly what changed, how it affects you, and more importantly, how it affects your loan and what you need to do today so you don't make these kinds of mistakes or get blindsided later on. Before we get into it, really quick, more than half of the people who are watching these videos aren't subscribed yet. Hit that subscribe button to make sure you don't miss out on another video, especially if you want the truth, things your mortgage loan officer won't tell you. Let's start off with the first rule change. HUD, which basically oversees FHA loans, Federal Housing Administration, just made a new rule. Your name must match exactly on every single document in your loan file. I mean, exactly. First name, middle name, last name, no missing middle initials, no shortened versions, no nicknames, no exception. Here's why it matters. I had a borrower recently, a correction officer, great job, good income, a clean file, but on her social security card, her name had her full middle name. On the driver's license, just the middle initial. On the loan application, no middle name at all. It took one underwriter 5 minutes to put a stop to the entire file. Why? Because if anything doesn't match exactly, FHA can now reject the loan, not delay it, not ask you to fix it, but they can reject it. And once a file's rejected, it's a nightmare to restart. Now, they don't have to, but they could. That's how small this rule is and how big of an impact it can be on your file. Now, what you should do before you apply, go look at your social security card, then your driver's license, then your pay stubs. Make sure they all match word for word. Oh, word for word. I don't know why I had so much fun doing that. If they don't, fix it. Fix it before you give anything to the lender. That's the first rule. The second one, this could change the entire mortgage industry. Fannie Mae, the company that backs most conventional mortgage, just announced that starting November 16, 2025, they are removing, I repeat that, removing the minimum credit score requirement from their automated system called DU. Let me clarify that. So right now, you usually need a 620 credit score to qualify for a conventional loan. But with the new rules, there may be no minimum score at all. At all. That sounds like good news, right? Yes and no. See, here's the problem. Fannie Mae removed the minimum score, but they haven't told us what they're replacing it with. And this is where I get scared at, and this is why I worry, especially for my first responders, my blue-collar workers. That makes lenders like myself nervous. And when lenders get nervous, approvals get tighter, not looser. That leads to our next point. Let me give you an example. I had a buyer last year, a firefighter, FDNY, who had a 598 credit score. So a 598 credit score, good income, good job history. He works for the city, but the score meant we had to go FHA. Under the new rules, technically, he might qualify for a conventional loan. Fannie Mae still has to judge risk somehow. They're not just going to approve everyone if they have good income. If they're not using credit score, they're going to use maybe payment history, maybe debt parameters, or patterns, late payments, length of credit, how much you owe, your income stability. So for someone like him, the question becomes, does removing the credit requirement actually help him? Or does the system still deny him because of the history? Or does it make it more riskier, making the loans scarier, less backed? We don't know much, which means buyers need to prepare now. And that leads me to my next important lesson. Imagine if the DMV said this: you no longer need driver's license to drive, but we'll still decide case by case if you're safe enough to drive. That's exactly what Fannie Mae just told us with this credit score removal. We're going to remove the credit, but you still might not get approved for it. And now we don't even understand the parameters. Are mortgage loans just going to be riskier? Is it going to be harder? Like, we don't know. And the industry is panicking. They didn't make loans easier. They made the rules less clear. And unclear rules always hurts more groups than the others. First-time homebuyers. Because when you don't know the rules, you can't plan ahead. And when you can't plan ahead, or when you can't plan, you lose deals you should have won. But there's something you can do, and that's to learn how to be prepared properly. Here's what you need to do before any of these changes go live. One, or even if they do go live and you're watching this later, just still do these things. I'm telling you, it's going to make a difference. One, clean up your documents' names. Make sure every file, every social security card, every license, every pay stubs, every bank statements all have the same exact name. Number two, assume credit score still matters. I'm going to repeat that. Assume credit scores still matter. Even if the system removes the number, your payment history will matter even more. Three, pay down credit cards before applying. The lower your utilization, the safer you look on new approval models. Number four, don't open new credit. Fannie Mae might weigh new accounts heavier now, especially now that the score is gone, or at least we think it is. Number five, talk to a lender early. The earlier, the better. Do not wait until it is too late. Talk to them now. Don't wait until November 16th to start it. Start it now. As soon as this video comes out, start it now. This is one of these moments where early planning beats last minute panic. Now, here's the truth. None of these new rules matter if you make the mistakes that already kill most mortgage deals. If you don't understand your debt to income ratio, if you don't understand how to use your credit cards, if you send paperwork late, you won't get approved no matter what the new rules are. So before you click away, go watch the video I just made called The 5 Things That Kill Mortgage Debt. And they kill them every time because the biggest dangers aren't the new rules. They're the mistakes buyers keep repeating. I'll see you over in that next video.